burnout, which I think sort of relates to that as well. At the point where they've been running their MSP for a long time, they just want to do something different.
Being profitable is important. How can you build a capability that produces consistent profit?
I feel like this is one of those questions that you can be a politician and not really provide a real answer.
Hi, Hartland. Welcome to Sunny's Silver Linings.
Thank you for having me. I'm really looking forward to today's session. We've been chatting for a little while, and I'm excited to speak with you today.
Yeah, I appreciate you taking the time to share your thinking, your insights. You have tons of experience, especially when it comes to M&A, Hartland, and that's where you are the expert of the experts. And when I was talking to you, I'm like, you have so much to share with the channel, and I should bring you to my silver linings. So we will be focusing on M&A silver linings today. And I would like to start with the state of the channel when it comes to M&A. What are you seeing? What are you sensing? What people need to know when it comes to state of the M&A in the MSP channel?
Yeah, look, I think you can answer that question from a seller's perspective and a buyer's perspective. So I'll speak to that point as it sort of has changed over time. The reality is these days, and it's not the answer that I love giving, but it's really a seller's market. So being a seller's market, just being that there are far more buyers than there are sellers. And so it's created, certainly a competitive landscape. From the seller's perspective, some of the things that we're hearing and some of the things that we've been hearing more, concerns over security. Security has become a point of stress for a lot of business owners, MSP owners, and in some cases, literally keeping them up at night, and in terms of like what's going to go wrong next and what liabilities do they have as an MSP owner. So that's something that is an obvious trend, but most people talk about it as a trend, as a way to either monetize it or as a concern to get behind. But I'm coming at it from the perspective of the seller, the seller's mental well-being, the seller's interest and viability of the business. So that's an issue. Burnout, which I think sort of relates to that as well, where groups are just at the point where they've been running their MSP for a long time, and they just want to do something different, or they just want out, and so that leads to another related rationale that we hear on a regular basis is just the reality of the demographics and aging populations and groups that are looking to retire. Recognizing that a lot of these MSP owners started their business 20 plus years ago, started them as IT consulting companies and or VARs, and that at this point they even if they converted into an MSP, they're just looking to move on and slow down and move into retirement. And then another one, and this is one's a little bit more recent that we've been hearing, but it's just the political situation and tax implications, and those who are looking to migrate to a different part of the U.S. and they're moving, out of California, they're moving into Florida, they're moving into Texas, into Arizona, Nevada. So as a result, groups that have had MSPs in some of these places are finding that they want to move and can't run the business remotely, and so they're interested in selling. So I mean, those are some of the things that we're seeing on the sell side, and then there's some buyer challenges and changes as well. I think from the buyer's perspective, the costs of organic growth and the difficulty there has certainly not gotten any easier. And then we've seen a lot of the MSPs scale over time, and with that scale has come the improvements in profitability. And also that we've got this MSP concept as opposed to the old IT consulting model or break fix model. And so We've got this allure of recurring revenue. And so that's attracted private equity investors and capital. And so that is bringing a lot of money into the space, into what is a very fragmented space. And fragmented just means there's lots and lots of buyers, which again creates more competition. And the other aspect is that there are so many buyers, and so there's an opportunity for everybody. There's low barriers for first time buyers who just want to get into the market and do their first deal, even if their first deal is a $250,000 one person MSP.
Okay. It's a seller's market. Just because there are too many buyers, a lot of people are out there to buy MSPs, and especially PE-backed companies where their whole roll-up strategy is to grow,
Yeah.
buy the growth, and everyone is trying to buy that growth, and that is driving more competition. So my question there is that if I'm a seller, what do I need to keep in mind? So what do I need to know? Uh, Knowing that competition is there, that knowing that it's a seller's market. So if I'm a seller who wants to sell in 2025, what is your advice to me?
Yeah, look, I think there's sort of two scenarios, right? So one scenario is a seller who wants to sell, but isn't having to sell right now. And that seller has the luxury of being able to perhaps make some meaningful improvements in their business to increase the value. You've got other sellers who we often deal with as well, who are in a situation where unfortunately they don't have the luxury of time. They want to move, they have to move, and as I said, they can't operate their business remotely, and they're in a position where they've kind of lined all their ducks up, and they need to or want to move. We get issues of health issues and so forth, where the person, I was dealing with a fellow the other day, and effectively under doctor's orders, he's been ordered to slow down. There's some real consequences to him from a health perspective if he doesn't do that. And so my point being that I'll answer your question because it's a good one, but it also has the implicit understanding that there's time to be able to do some of these things, and in some cases there just isn't. But the reality is that the holy grail of buyers is the MRR, and so not really surprising, but to try to increase the MRR as much as possible. And I should say that sometimes the non-MRR, so we're talking about hardware revenue, project revenue, subscription revenue, perhaps, although it's recurring, is kind of not good revenue. And I would argue that that's not the case. That there's still very much value in non-MRR revenue. It's just that you don't want that to be the majority of the revenue. So to the extent that you can, as a prospective seller, get your MRR as high as possible, and really into that 70-80% range is a very strong figure. No one's expecting or looking for 100%. And as I say, some groups will actually look at that negatively because they view that if you've got all MRR, then you're less likely to be bringing in new opportunities of customers that you can kind of upsell and grow into an MRR customer. And then, just other things like getting your customers on contracts. And that's, a big thing we hear on a regular basis from MSP owners who say, well, I've been running my MSP for the last 20 years. Customers work with me because they love us. We don't want to have them work with us because they're contractually obligated to, and have them have a penalty associated with getting out of the contract. And so all that makes sense if you're running the business to continue to run the business. But if you're looking at it from a buyer's perspective, buyers are looking for certainty. And if you want to check, you need to give them something in return. And so having customers on contracts provides a lot of reassurance to a buyer that those customers aren't going to be able to go anywhere. So looking at getting customers on contracts is one, but then secondly, looking at the duration of those contracts. Is that a yearly contract, a multi-year contract? We like annual auto renew contracts. That's kind of what we suggest. I'm not sure if you guys look at it differently, Sunny. Assignability is another big one. The ability to, if a business is sold, to have a buyer take over those and enforce those contracts, and then not have cancellation clauses as well, because that's another challenge. If a customer can simply, with 30 days notice, cancel the contract. And then there's a number of other things. I would just look at pricing and ensuring that your pricing is, I like to say, at market. And what I just mean by that is you're not at the low end, you're not at the high end. There's challenges on both if you're too high or you're too low. So sort of being in a competitive situation such that a buyer can take over your existing contracts, support those customers at similar price points to what you've been charging, so they're not forced to increase prices on the customers. And yeah, I mean, just there's customer concentration issues is another one to try to look at and see if you can reduce. And if there's on-premise support, you're having to send the team out. Is there any way that sometimes that's being done because the customer prefers it, not because it's a requirement? And then another big one is just the reliance on one person in the business, and oftentimes that's the business owner who is got relationships with customers, or everything's sort of reliant on that person. And to the extent that you can offload those responsibilities onto your team, so that you make yourself redundant, and then a buyer doesn't feel like they're taking over business that is reliant on the prior owner.
Got it. Now, one question that I have there as a follow-up question: if I'm a seller, let's assume that I'm about $5 million business.
Yeah.
I don't have the concentration risk. I have like all the best in class, probably KPIs that normally all these peer groups are looking at, or the KPIs that you just walked me through. If I have best in class KPIs from the growth trending, from the EBITDA trending, from the customer's retention, from the employee retention point of view, and what is the multiple that I can expect in this competitive? Just, I know it takes due diligence, it takes a lot more than just, I'm just kind of really trying to get an idea about what is that multiple that is going on today.
So look, let me. I feel like this is one of those questions that you can be a politician and not really provide a real answer and dance around. And I'll try not to do that. But what I think it's important just to understand that and the concern that I get here is that sometimes people's expectations are not realistic. And the reason is they go to a conference, they listen to a podcast like this, they read something online, and they say, well, geez, my friend sold his business for 10x. I heard this guy in the conference talk about what he got a 12x for his business, or some other number. And so what they don't understand is the context of the deal. And so I just, before I answer that question, I just want to say that unlike buying a house where you can say, well, look, I sold my house for this much, or some other fixed asset that's easier to attach a value to, a business has a lot of variables. And so for one thing, you've got the beauty's in the eye of the beholder. And so there's certain aspects of the business that might be more attractive to one group than another group, which will hence create a variability in the offer, simply because, hey, for me, if I'm opportunistic. I'll pay more, if the business is really attractive, it's down the road for me, and it's accretive for what we're doing. And in other cases, if it's just like, well, it'd be nice to have, but I don't really see it being a great fit, I'll pay less. So there's that aspect. Then there's also the payment terms are a big factor to a deal. So what someone will say is that they got this high number. What they don't tell you is that they're being paid over 5 years or 7 years or something. B, it had to sign an earnout clause, right? So there's risk on both sides, such that the seller isn't going to realize the full value of their business until some targets have been reached. And if those targets are reached, they'll done well. But at the same time, they took risk. And so with risk comes reward. And so when we talk about valuation and multiples, we need to understand that there's that dynamic that's going on at the same time. But I mean, to answer your question, something in for a business of that size, you're probably looking for a 6 or a 7x. Given what you just said.
Yeah.
Um,
Got
but there's lots of different components to that. I mean, general answer is we see sort of 3 to 8x as a range, but that's a big range, and there's
it.
a lot of factors, and that's a whole other conversation to get into.
Yeah, so if I'm a seller, I'm preparing to sell, what I need to look at is, okay, what key performance indicators I need to look at for my business, what buyers are looking at. So thank you for sharing those. And that's where I will probably overall double down to make sure that I have at least 1 to 2 years of good trending of my numbers.
Yeah,
And one thing that I have seen in the channel is that a lot of people, especially when they don't pay attention to these numbers or they are not self-aware that these are the numbers that buyers are looking at. So no matter how emotional I get, hey, I've built a great business, and how come you're not giving me the right multiple? It really depends on the business health, and is someone buying a healthy business or not a healthy business? So a lot of focus should be on your net growth and net profitability, your EBITDA, and other factors that make a business healthy. And if I normally tell people that if you show me $1 and I will show you $5, and
right.
if it's 5x is the multiple, if you bring any dollar, it could be you're being more efficient with your sales marketing dollars in terms of your ROI. What's your new logo cost, or dollar from new logo, dollar from existing logo? If you can be efficient there, you're basically, it's a multiplier.
It's
So
it, yeah, I was actually going to say it's exactly what you're saying, right? So that number is at the bottom is applied as a multiple, and so for every dollar that number that goes up, if you multiply it, let's say by whatever the figure is, if it's by 7, then $1 becomes $7. And that's absolutely true. The challenge is whether the buyer will buy into, sorry for the pun, but buy into the argument that is sustainable. Sometimes we see, especially some of the larger platform groups, where if the profitability is too high, they will feel that, hey, there's some savings going on here that is not sustainable or not sustainable under our model. But look, I mean, no one's going to argue with wanting a business that's more profitable, and particularly, and I think if to your point, in the outsourcing, which of course is your business, then that is a more sustainable source of profitability than it might be if you were, let's say, cutting costs elsewhere, where a buyer might not feel that they want to maintain that structure in place, if that makes sense.
no, 100%. So sustainable strategies. If I'm leveraging just exchange rate, right, between US dollar and Canadian dollar, for example, that's the capability is leveraging that as a strategy, and it can be continued even after the purchase. Knowing that profit is sustainable, knowing that strategies that are generating profit is sustainable, but being profitable is important with putting some thinking into, like, how can you build a capability that produce consistent profit and
Yeah.
consistent growth. That's what the buyer is buying. So my next question is, from the buyer's lens perspective, there are a lot of companies that are growing and they're competing with each other to even they want to grow to a certain level and then look for another platform. So there's a lot going on right now in the market. My question there is, when it comes to the buyer, what are you seeing in terms of demand? Like, do you see more buyers where they're looking for $5 million MSP or $10 million MSP? What's the sweet spot in terms of the buyer's ideal customer profile? What are you seeing in terms of majority of people are looking for this much EBITDA?
Yeah, so I think the first point that's important there is to understand the market that we deal with, because we see what we deal with, and what we deal with is typically businesses that are 10 million in revenue. Okay, I'm not talking about valuation, I'm talking about revenue, 10 million in revenue and under. And within that, there's going to be a bell curve, and so that bell curve, it tends to skew in the $2 to $4 million range. So that's what we see. If we were an investment bank in New York dealing with large platform companies, then we would have a different view. So I can only comment from where from our vantage point and what we see. But in terms of I think the first thing to say is that going back to my comment earlier, the industry is extremely fragmented, depending on who you speak to, and you may know the numbers better than I do, but something in the neighborhood of 50,000 odd MSPs in the US. And so it's a very fragmented space, and you end up with the large platform firms buying the let's say the large owner-led businesses. But those large owner-led businesses may have done a roll-up themselves to purchase some of the smaller owner-led businesses, who in turn purchased a really small 1-2 person shop, right? So it kind of trickles all the way down, is my point. If we're talking about financial buyers, private equity groups, their threshold is almost consistently about $1 million in EBITDA. That's kind of the number that we hear over and over again. There are some that will go down to 500,000, particularly if they're looking at it as a tuck-in to an existing platform. That 500 is a workable number for them. Having said that, if it's an owner-led MSP doing their own roll-up, they may use internal cash to fund it, or they may be sort of investor-backed. But in those cases, their numbers are a bit lower. We have buyers for every scenario. And in some cases, it's, I've got one right now where it's a single owner. He runs the whole thing himself. He does all the support. He's a one-person show, and wants to retire. And we're going to help someone like that out as well. So there's something for everybody out there. It's kind of the gist.
Yeah, that's awesome. And anything, Heartland, that I did not ask you that you want to share with the channel?
Well, so yeah, I mean, do you have like another 2 hours? Because there's a couple of extra things. There's a lot that we could be talking about from the buy side. There's things that we could go over with respect to what a buyer should focus on, and kind of how to prepare. We've done a lot of podcasts in the past and run our own webinars and online events, and we have a fair bit of online content covering some of these things. But the reality is that there's a fair bit to learn, particularly if this is something that you're looking to do for the first time. But I think that if you're a buyer, I think you should have a process, and you should be thinking through that in advance of looking at opportunities. And we can certainly chat with you if you're interested on a one-on-one basis in terms of how to approach that. And if you're a seller, as we talked about earlier, if you have the luxury of time, there's some things that you can do to increase the value of your business, to optimize it for a sale. And if not, then we'll help you through the process regardless. But yeah, I mean, you and I could talk for a while about a lot of different topics and go a lot more deeply. But I want to be respectful of the time that we have today.
I appreciate that. And where can people find you?
So we publish a list once a week on Wednesdays. It goes out to anyone who's subscribed to our list, and you can go to the MSPbroker.com or the hostbroker.com. And again, it's MSPbroker.com or the hostbroker.com. And you can subscribe for free to get access as a buyer to opportunities. You can email us off our website, and we'll be happy to chat with you again as a buyer or a seller. We focus from an MSP perspective. We are focused on the North American market, and been doing this for over 20 years. So I like to think we kind of know what we're doing, and happy to chat with you if you have questions.
Thank you, thank you. And one bonus question
Sure.
for the channel. What impact do you see of tariff? Now, there are a lot of Canadian MSPs as well. We have a couple of partners like F12 to few of our partners are doing business on both sides, or they have. So, do you see any impact on the channel from the whole kind of NAFTA-related conversations that are going on, like the political impact of the politics?
Yeah, look, I mean, this has been a roller coaster in the last week, that's for sure. I mean, I think the most obvious one is, as you mentioned actually earlier, is currency fluctuations, exchange rates. I mean, the Canadian dollar just took a massive hit on, I think it was Friday evening. It's what it was, and it hit. I think it was a 20-year low, and it didn't last very long. But so if you are a Canadian firm operating in Canada, but you have U.S. customers and U.S. income, obviously that's preferable with the exchange rate the way it has been. And even now, it's certainly at a kind of a multi-year high, but it dropped quite a bit since the high of Friday. But so I think that's an obvious piece, and there certainly, as you say, there are groups that are operating in Canada that have either U.S. operations or service U.S. customers from Canada. One of the things that as a service provider in Canada that one would hope would never happen is tariffs on services. And I don't know how that would even be managed, but it would open up a whole can of worms. The currency one, though, is probably the biggest one.
Biggest one, yeah. Oh, that's awesome. So good news for people where they are leveraging like clients here, but they are based out of Canada, but clients are here, and the check is coming from US to Canada rather than Canada to US. That will be, yeah. So no, that's a great point. Thank you for sharing that.
And the flip side would be true, obviously, as well.
Yeah.
If there's a firm in the U.S. providing services to Canadians, it becomes far more expensive. And so, conceivably, the Canadian firms might be looking for an alternative that doesn't have the currency exposure.
Yes. Thank you so much, Hartland, for coming to my show. I truly appreciate you, and I look forward to seeing you soon in person in one of these channel events.
Likewise, Sonny, always a pleasure, and I appreciate getting to know you better over the last year or so. So thank you very much, and I wish everybody a great day, and thanks for your time. It's been a pleasure.
Thank you. Thank you for watching Sonny's Silver Linings. Don't forget to like, share, and subscribe. See you next time.